high frequency trading continues to be on the forefront of our thinking. Adam Sussman, our head of research, just chaired a panel in Florida at the GAIM hedge fund conference and led a really interesting discussion on order types. And I'm here, this is Larry TaBB, founder and CEO of TaBB Group, here with Adam Sussman. And what we want to try to do is talk a little bit about what Adam's thoughts were from the panel and the conference, and revisit some of the discussions around HFT and order types. So first, why don't you explain the panel?
Yeah, sure. So basically, this is at the GAIM conference down in Florida, and prior to the panel that I moderated, Scott Patterson gave a recap of his book Dark Pools. So for those of you that have read Dark Pools or have read about it, in the book he talks about, one of the central characters is a man by the name of Chaim Bodek, who uncovers allegedly some undocumented order types that the exchanges were offering in order to help some of their high frequency trading clients. So Chaim was one of the panelists on the panel, and then he was joined by Mani Majori, who's the CIO of TradeWorks.
Okay, so I had two HFT guys.
So one, former HFT guy turned whistleblower in Chaim, and then Mani Majori, an ongoing practitioner. So really one of the central points that we talked about was, how prevalent were the undocumented order types, who was injured by it, and what are we going to do next? And so on that point, there was a little bit of a debate about just the meaningfulness of the order types and whether it really, the degree to which it hurt people that weren't really focused or haven't been focused on market microstructure to that degree. So, from the TradeWorks perspective, they never saw any, negative impacts from order types. Chaim, obviously, as you could read about in the book, was. And at no time, was there any insinuation that maybe, that's because there was an unfair playing field between the two. Mm-hmm. They felt like they had equal access to information regarding the order type. So it really centered around, well, maybe there were some strategies that were more impacted by these, allegedly undocumented order types than others. Mm-hmm. So that's one way to look at it. The other way to look at it is, if you did the right amount of testing and you looked at how your orders were actually being handled by the exchanges, regardless of whether they were documented or not, you would understand how the exchange order matching practices actually worked. And so then it gets back to, okay, if a firm has a fiduciary obligation to understand how exchange order matching works, and they were actually doing the right work, well then, then this wouldn't have really been an issue. Right. So that was number one. Number two, and that's really where I think the debate occurred. Mm-hmm.
So do we think that there is an issue, or is there not an issue? Do we think that the issue's resolved? Should the brokers be responsible? Should the buy side guys get into the the nitty gritty of how these order types worked, or should where do we think firms should go with this?
That's where I think there was more agreement. So, no one on the panel was saying the market structure is so complex that institutional investors can no longer deal with it, that they don't have the financial resources to do that. If they wanted to, they could, mm-hmm. right? Even even a mid-sized hedge fund could probably spend the amount of time necessary to figure this out. There's lots of high-frequency trading platforms available through which they could execute on their own. Or they would leverage their brokers, and the brokers obviously
should have. That's
their job. So, there was agreement on the panel that that the regulators shouldn't kind of regulate the complexity out of the system and make this so simple that all you need to do is use limit orders, for example, being the extreme.
So to a certain extent, there was unanimous agreement that shouldn't occur, that we shouldn't dumb down the market so that there's only a limit order and a market order.
Right. In my opinion, in fact, what they were actually advocating for was more complexity, in the sense that both of my panelists wanted to see the end of the end of the abolishment of locked markets. They want to see locked markets. So now, on the one hand, you could say that will actually create less complexity because
you want all the structure to kind of handle locked markets and hide orders that conceivably locked markets.
Right. On the other hand, that kind of returns to the days where you have, exchange arbitrage and ECN arbitrage, where you could,
you could conceivably buy and sell for a profit and both be,
sure,
and be on both.
And that used to be, that was probably the first, if not the very first HFT strategy. So. Right. So I think maybe it's 6 of one, half dozen of the other. Maybe whether you have locked markets or not, you're going to have complexity. It's just a question of where that complexity resides. But I thought it was interesting that they both agreed on that point.
Interesting. So to devolve this conversation even further, so that, this should be like the NRA, and we should and so we should fight market structure complexity with more market structure complexity.
Yeah, exactly.
So more guns, keep
You're right.
More safe.
The only thing that stops a bad market structure is even worse market structure.
Even worse market structure. So any final takeaways you want us to think? Do we think this battle is getting closer to being won either by the rollback the clock guys, or as we move from humans to machines, we need to figure, the machines have to be able to figure out how machines trade with machines, and you can't just simplify it back to limits and stops and market orders?
Well, I think that if I were a regulator and I were watching this panel, it would give me no indication as to what to do in order to really solve the problems of the institutional investor, because I don't see how either abolishing locked markets or keeping it the way it is really going to solve the deeper problems facing institutional investors. I think that gets back to fragmentation and dark pools and order routing. Order routing. So I think that there was kind of the fact that there was more agreement on the panel about locked markets kind of actually left me a little bit baffled as to what a regulator would take away from the panel.
Interesting. So what do you think the regulator should take away from it?
Well, what I think I think there needs to be more, and I hate to say this, but more studies, more data-driven decisions around how to proceed. I mean, everyone is, often the pro-HFT camp would say, look, spreads have narrowed, and there's little transaction costs have come down, so on and so forth. And then the other side says,
I can't get anything done.
We can't get anything done. So really, at the end of the day, you really do have to go off of the data. And so I think it's the responsibility of those that are advocating for more regulation to tell us what's the data we ought to be looking at then. And it's not number of IPOs. It's not the lack of small cap research. Those are like bigger issues that have nothing to do with market structure, in my opinion. So I think there just needs to be, if you're going to say that the data doesn't matter, then you got to tell me what the data that does matter is.
And then I think the thing that goes hand in hand with that is that unfortunately in the market structure we have, you can't just say, well, we should widen ticks without actually creating pilot programs to do that thing.
Right.
And so I think, hand in hand with that research needs to be either markets or portions of the market that we can carve out to do test studies on real live data, because you can theoretically judge whatever you want, but it doesn't really matter or mean much until you actually see it in action.
No, I agree. I'm in favor of more experimentation through pilot programs.
With that, I want to thank Adam Sussman, Director of Research for TABB Group, and you guys for watching. I'm Larry TaBB, founder and CEO of TABB Group, and thanks for joining us.